Hello, everyone, and thank you for joining us for today's episode. Before we begin, I want to introduce you to the Bequant Group and thank them for their support. If you're a crypto hedge fund, prop shop, or institutional investor, you should explore the array of crypto capital markets products that Bequant offers. Whether it's low latency, co-location spot trading, producing lightning fast sub 500 microseconds from tick to trade you're looking for, or single direct market access, multi-exchange prime broker with margin financing, Bequant is a leading holistic digital assets capital markets firm. Bequant's additional products are institutional custody, crypto fund administration, and original, insightful daily research with their Crypto and Coffee newsletter, which produces actionable news that's timely to the market. To learn more about the Bequant Group, please visit bequant.pro. Again, that's bequant.pro. If you're watching this on YouTube and like the show you are about to watch, please hit the subscribe button below. Now let's get to it. Well, folks, thank you for joining us today. This is going to be a really great episode, especially with everything that's happening in the markets. I'm here alongside Ryan Gorman, my cohort, and we have a special guest on today, Feng from Tapestry Capital. He's joining us today to really go over a bunch of the really interesting news points that are going on today. We have the Bitcoin halving coming up. We have a lot of volatility that we just came out of the markets with. We have obviously Black Thursday, as they like to call it, some places that happened March. So during this short span of time, a lot of stuff has happened on the institutional and crypto hedge fund side. We're really happy to be joined by him. Want to get a lot of insights. We're going to milk him for all he's worth and really try to learn a lot. So, Evan, thank you for joining us today.
Yeah, thanks a lot, Alex and Ryan, for organizing. Really happy to be here. I know we've shared the podium on a couple events prior, so always happy to catch up about markets and share thoughts and kind of hear what you guys are seeing as well, but also obviously offer what I'm thinking and hearing as well.
Absolutely. Yeah. The first thing I want to do is you have a really interesting background when it comes to the fun side of it, where you came from and where you are now. Can you just give everybody like an overview of that journey and what transpired you to go from traditional to crypto?
Sure. Yeah, happy to start there, Alex. For those that don't know me, hi, Feng. So as Alex alluded to, my background is actually from traditional finance, where I spent several years of my career before making the jump over to crypto full-time. Started off doing investment banking at Barclays, and then was at a couple of different hedge funds in New York City, doing fundamental long-short equities at Citadel, and then Point72, which are some of the larger hedge funds in the world. Worked at a couple of different teams within the discretionary strategies at those funds and covered stocks within tech, media, and telecom. And the transition to crypto for me was definitely one of those stories of gradually but suddenly falling down the rabbit hole like a lot of other people. Started off with me reading the Bitcoin white paper and really feeling that in the base of my spine as I did more research. It went from an initial feeling of dismissal to realizing that this was definitely a new greenfield asset opportunity for emerging managers like myself to really try to pioneer ways of thinking about the fundamental investing as well as understanding the space, the projects, and how all of those interrelate ultimately into theses that will get proven or disproven by the market over time. And the idea is to build that track record, build the relationships, and that's what I've been working on for the last year or so that I've been full-time in crypto as founder and chief investment officer at Tapestry Capital.
That's great. Thanks for that. And can you tell us a little bit about Tapestry Capital and what
Sure.
And what you're doing?
Yeah, so TapCap for short. The ultimate, I suppose, the ultimate synopsis of the strategy is to take some of the best practices that I was trained in at the places that I worked, that I mentioned earlier, apply them to the crypto asset world, which is easier said than done, right? As I'm sure we all know, there are no 8Ks or 10Qs or 10Ks for crypto projects, even though some have the liquidity that now are starting to rival some of the mid-cap or even large-cap equities traditionally. There are very different ways to think about addressable markets, how teams are delivering or not delivering on their promises, and then ultimately the right ways to triangulate value, which even as you get really specific and precise are still not necessarily, you can never really get as fully comfortable in the same way that you can with stocks. So there are definitely ways to pioneer how to think about the risk reward frameworks of digital assets like Bitcoin and others. So ultimately the idea for TapCap is to, deliver outsized returns, not only versus the S&P, but Bitcoin within the context of active management strategies. I guess the last point is, not investment advice here specifically, or just generally the things that I say, but ultimately, what I do believe is there is room for differentiated asset managers to, through a combination of unique fundamental research angles and kind of applying some of the past experiences that they may have had to outperform versus some of the benchmarks that I mentioned. So that's sort of the mission for TapCap. And I think, others, other competition in this space probably think similarly, but we are all united in the idea that there is some meat on the bones as it comes to active management within the space, even though it is certainly very challenging, especially when you benchmark against BTC.
Yeah, go ahead, Brian.
I mentioned that because BTC is having quite the run-up.
For sure.
The past few weeks after a pretty volatile previous month. What do you think is behind some of that volatility initially, and then, of course, what's causing this run-up that we're having?
Sure. I think, not too differentiated in my thoughts as relates to the actual events of Black Thursday, but it's quite simply just de-risking. It was a Bitcoin specifically, as the largest asset within crypto. A lot of people sought more safety in cash initially and sold off their risk-on positions. You guys have probably been paying attention to some of the on-chain analyses that people have been doing, tracking down how it was more short-term positions and maybe levered longs that were ultimately margin called or had to liquidate, as opposed to the hodler cohort staying pretty strong. That initial de-risking, I think everyone's kind of come to a consensus agreement on. But it's more interesting to think about why we have bounced back more quickly in really what looks to be a V-shaped recovery as opposed to something more gradual. I think the magnitude of it has surprised a lot of people to the upside, even myself included. But I think it's a combination of the fact that Bitcoin survived the events of Black Thursday, leverage was reset. And in some ways, something that I have been saying, and I believe has been part of the thesis playing out, is the idea that Bitcoin and crypto in general is more likely to bottom sooner than equities, whenever that bottom is, in the sense that, for stocks, there often are lingering overhangs, such as fundamental numbers reset. So if a company, you kind of know, obviously the first quarter was going to be bad. Companies are starting to report that, but a lot of them have pulled full year guidance for the second quarter or even the full year, right? So there is that remaining level of uncertainty that I think has capped upside, at least from a fundamental basis, for a lot of stocks. And that doesn't necessarily happen for Bitcoin, just from that technical perspective. And that's even before you fold in some of the potentially positive catalysts like the halving, the launch of Libra in the second half, and other fundamental and even technical indicators that suggested maybe the sell-off was a little too extreme in terms of forced selling as opposed to opportunistic, and that has been now replaced by steady buying. And I guess the last point that I'll make here is, we've started to see with what came out yesterday around Paul Tudor Jones's letter kind of being public and his thoughts on the longer term thesis for Bitcoin. It does appear that for every seller there is a buyer, and there were probably stronger hands buying over the last month or two than the people that were selling in this market. So I think overall, when you blend that together, it does make sense that price has recovered maybe a little faster than people expected, but there's nothing super crazy or new about what I think has been happened. Sorry, what has happened or what has been happening.
And there's been obviously a couple of back-to-back events, right? So we have a huge sell-off both in the equities market and digital markets, and then we have two catalysts, one in each market. We have the halving coming up, and we just went through a huge stimulus in the U.S. economy. With you mentioned V-shaped recovery. Do you think things would have played out differently if we didn't have the halving coming up this year, following so closely to that sell-off?
Sure. I actually think this might be a contrarian view. I don't necessarily think the halving was that much of a material contributor to the speed of the recovery, maybe the magnitude of the recovery for Bitcoin. But at the same time, you could have argued, we wouldn't have needed a recovery in the case where there was no COVID scare, right? We saw actually crypto markets start the year off pretty strong, both in January and February. But I think the short answer is I believe the halving, it's something that has been easy to coalesce around as a narrative, but I don't necessarily think that's as important versus the overall kind of story of Bitcoin in terms of the scarcity value that's algorithmically derived, the hedge in the form of a tail risk against fiscal irresponsibility, or even geopolitical uncertainty and instability, or emerging currency weakness. Those are all things that would still be happening and still apply for Bitcoin. I guess I'm interpreting your answer to mean like, if the halving in another mirror universe happened to be every 4 years, but in 2017 and 2021, but the coronavirus still happened now, I think in that case, we probably would, I think the impact would be less than what some people think, because I think the other attributes that make Bitcoin attractive, separate from the specific event of the halving, I mean, those are all still in play and would have been in play, but obviously impossible to know. You can't run the world twice.
And you can't still overlook the rule of the herd mentality of retail crypto buying too, right? So I mean, that's almost like an accelerant that helps. Listen, Ryan, we all know fundamentally what what is realistic with Bitcoin when it comes to the halving, or what risk on, risk off sell-offs. But the thing is that the retail mindset is still going to be opportunistic, whether they understand Bitcoin or not. I mean,
sure.
Interesting. And, let's go into the Paul Tudor Jones thing. It just happened.
Just happened.
This letter. Huge
yesterday as we're recording this. Yep.
Yeah. I mean, big name billionaire in the hedge fund industry. And it wasn't, I'm going to buy a Bitcoin and give it to my kid. It was, I am buying Bitcoin as an inflationary hedge.
Yeah.
It was noise. Tell us what your thoughts are on that and what that could possibly mean now for the market from an institutional standpoint.
Sure. There are definitely a couple of thoughts that I have on this. First off, I think it's important for people that haven't, I think now somebody's posted the letter on Scribd. It's like 10 pages. I would recommend people read through it themselves. The headlines, I don't think fully do it justice, in the sense that one of my most positive takeaways from reading it was, to your point, Alex, very nuanced, very well researched. In fact, Paul mentioned in it that he himself, actually, this wasn't the first time he's invested into Bitcoin. Like personally, he had some exposure during the retail FOMO run up. He had better sense than a lot of people in selling out of the position completely in December 2017, because it just felt kind of crazy to him, is what he wrote. So the fact that he's come back to the well, so to speak, and really re-engage with the idea, and in large size, as he discloses with the potential allocation for the BVI fund, that is really exciting. I mean, not only is he talking about it as an inflation hedge, he's talking about it from a longer term perspective. I think he mentions like the 10-year horizon within the metaphor of his horse race. And I think the idea that he is, to your point, like a very respected macro investor, really gives people the air cover to start bringing this up. It may still not get fully past the investment committees that are comprised of probably older people than the investment level staff at most allocators or active managed funds, but it's going to move the conversation along from something that's like a weird curiosity to more like, hey, we should at least talk about it, right? And that's what people like you or I really have been hoping for, other active managers in the space, other marketers, people that really depend on new capital inflows to kind of move the space along to where we think it should be. there are really strong hints of that, right? Like one of the things that really stuck out to me was Paul mentions, he kind of really just does a very simple backing envelope calculation where here's like the market cap of Bitcoin, and here how that under indexes relative to how people rate its ability to store value versus gold, for example. But overall, he talks about, I think Bitcoin for most of, it's like 6 or 7 pages, is very in depth of the 10 kind of page overall thesis reflection on the coming monetary inflation, which is super interesting and very positive. Lastly, though, I think what people aren't talking about as much, and you don't want to just be bullish for no reason, is thinking through the idea of why he released the letter when he did was something that I was trying to think through. There's always intentionality to, as Ryan would know better than all of us, right? Like when do you really want the headlines to hit? I was talking to another friend of mine in the space about it, and I think our conclusion was that perhaps if one believes, and we'll get to this too, about the halving being maybe an event where people are likely to take profits, sell some spot, whatever, maybe if he wanted to protect the downside of whatever he's established already, kind of releasing this a few days before that, maybe removing some of that downside risk, or even making it easier for others to kind of average in from a dollar cost basis. So I don't know. I'm curious if you guys have thoughts on that. I don't just want to be delivering a sermon either, but that's
Ryan,
kind of
this is your
something
field.
Interesting. Like, what do you think the game theory is, Ryan? Not to put you on the spot.
You mentioned that because it does make a lot of sense, because as a number of people have mentioned and noticed, a lot of options positioning is bearish right now, and it leads one to believe that at least the sophisticated investors in the space are expecting at least somewhat of a dip and trying to protect against that. But when you have someone who can move needles like Paul Tudor Jones going out there and saying, "I bought," I mean, he's obviously expecting a positive reaction to that. Otherwise, he wouldn't at all put that note out there. He wants people to join him, I guess, and see that, realize the benefits of allocating Bitcoin to their portfolio, whether it's personal or institutional. And given that, do you think that there will be any short-term benefit to at least people like yourself, where family offices might take a more serious look at this and at least kick the tires a little harder, and instead of just moving the needle and starting to have the conversation? Do you think that there will be an interest in allocating anytime soon? Now, obviously not before the halving, but do you think it'll happen maybe this year?
Sure. I think the short answer is, as awesome as it would be for that single headline to be what gets somebody to send the wire over, so to speak, I actually think, if you think about it from a psychological perspective, it's not necessarily the first leader of his type, but the first follower. Maybe another headline from somebody with a similar stature, like Ray Dalio, who some people think is positive Bitcoin. Sorry.
Or Andreessen Horowitz too, right? Starting there.
Sure, that's true too. Yes. There's definitely have been data points where we've seen that. Although the A16Z fund is obviously a little bit more of like a follow-on type activity.
I
from
just
a pool
think
of
it
capital
means something different coming from an actively managed liquid.
Exactly.
Yeah.
I agree with Alex. I think it's definitely good that Paul Jones feels comfortable being the first in the door, so to speak. My point is only that I actually think the acceleration in sentiment and conversations and actual allocations will happen when there's another headline of somebody of a similar stature. Just thinking about, like, I forget exactly which TED Talk this was, but there was a pretty good study done about how, if there's one person dancing by themselves, people just think that person's crazy and they're not actually going to follow them and do the activity. But it's actually when the first follower comes up, and I'm paraphrasing this a lot, so I apologize, I can't remember the source. But
and the dance floor fills?
Yeah. It's when the second person joins the first person dancing, no matter how crazy that person's movements are, that more people feel comfortable. So it is really that herd mentality, and it certainly applies. So I think what I'm watching for personally is another positive catalyst of somebody else being more comfortable talking about this, or really not just talking about Bitcoin positively, but putting a stake in the ground in the way that the PTJ letter mentioned specifically low single digit allocation potentially, with the suggestion that, however bullish he was feeling, they're probably not at zero right now. They're probably buying, right? So that level of conviction is what I'm looking for. But I think once that happens, it probably does start further heightening the maybe the sense of urgency, which, honestly, there really hasn't been, right, from an institutional adoption perspective, separate from the retail FOMO. So we're probably going to see that. Other things to keep an eye on would be some of these backdoor ways that people can get either physical exposure via backed, or some of the ways that you can maybe take delivery of some of contracts that you initially allocate to. But that would be another evolution that I'm looking for. I think, sorry, go ahead.
No, I was going to say this is less important than what you were about to say, but I think it would help maybe if John joined Twitter and started putting out like firecracker emojis.
He could put rocket.
Yeah. I don't know exactly how I feel about that. I'm almost happier and less nervous when price grinds up and nobody knows why, because that is kind of, to me, the footprint of institutional position building, as opposed to violent moves up. You see a $2,000 daily candle, and most of the time, not most of the time, I don't exactly know the hit rate, but it feels to me like a lot of the time that gets faded a lot harder than when you're seeing negative funding continue to persist, yet price go up in the spot market, open interest continue to recover. Those are things that are encouraging. But there's obviously risks too. I mean, there's catalysts that I'm trying to keep an eye on too, from like a regulatory perspective that could still be headwinds. We still have the, plus token overhang potentially, as well as we haven't heard anything about Mt. Gox, right? So like we should all be realistic. There's still potential supply out there, but maybe that's, somewhat offset by the increase in demand, as well as the just overall difference in the composition of miners that are mining in terms of their profitability post-halving.
Speaking of miners,
Wasn't there a fist fight recently?
What's that?
Yeah, today, right? I don't really know more than the headline, so I don't have smart ideas.
There was a fist fight at Bitmain between the old CEO and then somebody else.
Yes, it's McCree. I think so. McCree is a person that is in the middle of a lawsuit, trying to figure out exactly what the financial stakes and kind of liabilities are. But I believe what I saw on Twitter reported I think it was by Dovey, right? And she was saying that there were like 10 strong men from Bitmain that kind of took something that McCree got from it looks like, I don't know. I don't know if that's, I don't think that's material to the price of Bitcoin, but it's interesting to watch the drama, the distraction.
So
in some ways.
Speaking of the price of Bitcoin, a lot of the community is split over what's going to happen when the halving occurs. We were talking about this sort of, but what do you, Evan Feng, what do you think is going to happen?
Oh man. All right. So, to go over some of the data points for my own view, my view is not going to be that exciting, honestly. So we kind of talked about how options have gotten more bearish over the last week or two, actually. Volatility has gotten more expensive to buy, but we've seen the skew for that premium accrue a little more to puts. So there's definitely people buying downside protection. At the same time, CME open interest has crept up. And retail does seem, the same level of bullish that they've always been. They've always been, I think, out of all the different stakeholder investor groups, the most bullish about the halving. I think if you asked me this a week ago, I would have been more negative than I am today, simply because I don't think people are talking about the Paul Tudor Jones letter as something that like changes the game theory post-halving, even as now more downside protection has been bought. So what I mean is, like, one of the interesting lessons from my old life in equity long short investing was sometimes it's related to the idea that like good companies are not necessarily good investments, or bad companies may not be bad investments. The idea of like, where do you think consensus expectations are, and like what is maybe the most surprising outcome that could happen? And if nobody's really positioned that way, maybe that's like an interesting thing to think about, which is not to say to be contrarian, right? I feel like at this point, it feels like consensus expectations are we're going to dip post-halving, and people are, positioned for that. I think by way of that, I believe maybe the downside is not as material as people think at this point in time.
So like
but obviously I could be wrong. Like, I guess what I mean is if people thought we were going to sell off 20 to 30% post-halving like a week ago, I feel like that's now been, maybe that magnitude has been cut in half, but maybe it doesn't really matter from an absolute price perspective because we've obviously rallied over the last week. I wish I didn't, I don't feel strong enough to go out on a limb beyond that because it is hard to say with certainty, right? But I just feel like the downside has been de-risked a little bit more than we've seen in the past. I don't think there's a minor death spiral that's possible, to be clear. I've been doing a lot more work recently, just trying to understand what are reasonable expectations of how long block times could lengthen, what hash rate could be. You know, you could look at what happened with BCH and BSV just as a rough proxy for, you know, some expectations for just mechanically, like what's going to happen, to better understand maybe some of the headlines that could come out of like CoinDesk, for example. Like, I think you may see some things that appear scary, but if you're ready for them, they may be, like, I think they may be things that get actually bought after the initial move because you're like, wait, the average block time is, you know, 12 minutes instead of 10 minutes, but the security model is pretty much the same, or it hasn't been shocked in a way that, you know, is unexpected compared to Black Thursday where price halved. Like, that was shocking. That was a lot more scary. The fact that Bitcoin survived that and has come back, I think actually de-risks the halving in some ways. I just don't really feel like the people that are real investors moving real money around, if they've hung around the hoop or re-engaged prior to the event, are the ones that are going to be like, oh, it's down 5%, like we should sell. I think they may be looking to buy, but I don't know anything. Obviously, this is just me talking out of
course,
my own like sense of how things are. I mean, I wish I knew like what Jihan or some of the people sitting on millions of, or hundreds of thousands of BTC are thinking, but it's probably going to be a nothing burger because people are expecting to be a something burger a little bit more, I think, based on what we're seeing in the data.
One more thing I wanted to ask you regarding that. A lot of people were saying for quite a while that the halving was already priced in. Do you think this grind higher is proof that it wasn't priced in, or do you think it's just reached fair value after Black Thursday?
I think more the second one, actually, Ryan. I'm one of those people that thinks the second order, like I believe in a weak form of the efficient market hypothesis, but I really think it is very difficult to forecast the demand side of Bitcoin, which is all that matters, right? We could all say that we, you know, believe XYZ will happen and that will cause ABC to happen because of, you know, all these different things. But what is it, like Mike Tyson was the person that said like everyone has a plan before you get punched in the face or something? Which he was paraphrasing some military strategist, I believe, right? But the, you know, no plan survives contact with the enemy is the more common phrasing of it. And I think that's definitely the case with the halving. And, you know, if you kind of accept that you can't see through that fog of war, but you believe ultimately that some of the unique macro setups and reasons for why Bitcoin and crypto in general, you know, has a reason to exist and a reason to capture value and accrue usage and kind of awareness going forward, then that should be something that is ultimately like a net positive just because we've gotten through the event. So I don't know if that's talking in circles, but to clarify, I don't think the halving, I don't think one can really have a view on whether the halving is priced in because I think it's difficult to get all the variables under control. But I think if you just view it as a binary, like, has it happened in the future or now are we past it? That's kind of interesting because sometimes just getting through an event will de-risk that from an investment perspective, which is like simple and it sounds stupid because it sounds like it should fit in the previous bucket of like, hey, everyone should know this. But if you think about like the incremental investor, you know, the next Paul Jones, maybe they're still doing the research. Maybe they're like, they've received the report on their desk from really smart guys on their team that like own BTC personally or other cryptos, but they haven't as like the CIO, or if it's like the, you know, the founder and ultimate decision maker of a single manager hedge fund, maybe they're waiting to see what happens after this. Maybe they're even waiting to buy, or maybe if it goes down 50%, they're gonna be like, this was stupid. Why did you like waste my time making me read it? But yeah, I just think definitely there are a lot of eyes on our space. and getting through it,
different.
even without a price action, is a positive. I think that's what I'll say.
Okay.
Yeah, no, but it's also a different set of circumstances to me, right? So when the halving happened before, it was Bitcoin, I felt, was a little more clear cut. Now, as we go into this one and we're saying, hey, is the price baked in? Is the price not baked in? Think of other things that have come about in the market for Bitcoin since the last one. You mentioned open interest, right? So open interest is really an indicator to push down the market, right? We have something that's happened though because of the halving, which is a lot of buyer interest from the retail market, right?
Right.
So as you get your options open interest trying to put pressure on the market, you have all of a sudden a bunch of FOMO retail buying going on because they don't care. They don't see they're not you and me or anyone. They're not seeing the open interest, right?
Right.
So they're just buying. So it's counteracting each other, right? And the price of Bitcoin is going to go up because of that little acceleration. I think it's, in my view, it's almost how much does it go up? I think that interest, the open interest has an effect in acceleration. I think we were like 6 handle earlier today, and, we formed a double top and stuff like this. And if you take a look at technical indicators, you're looking at Bitcoin not going up very much more from where it is now. Let's call it the 99 to 10,000 mark. Where in the past it would have almost no ceiling for a little while. You know what I'm saying? Like there's a couple more variables in the game now than there was in 2016, 2017.
For sure, Alex. And I think the net of that is, I feel like that's better and more healthy for price discovery, right? It reminds me of what I said earlier, where it makes me more comfortable when price is less volatile, and that's a byproduct of more participants in the market, which is really cool. Something that I'm still trying to wrap my head around is the idea that, retail battling institutional. Historically, that's been retail always loses, but for crypto, it's it's a little bit different in that I think it appears that I don't know. I don't want to use the word evenly matched because clearly dry powder is very different. But certainly some of the OGs, and by definition, right, the OGs in Bitcoin were mostly non-institutional people, even if they were investing. I guess there were institutional people investing personally for their funds were, but that is something to consider. I don't know if you can just assume institutions will win in any given battle, because ultimately I think we're all, if the space goes where we think it does, then we're probably all going to be on the same side of it in the way that, people that bet on the secular internet thesis, ultimately winners of those were people that, were net long Amazon or Netflix. Obviously easy to pick survivorship bias post 2000 bubble, but that's just as an example. I do think it's an interesting dichotomy, but maybe it resolves, we're enemies now, or they're enemies. Retail and institutional interests are potentially enemies, but they don't necessarily always have to be enemies. And in the rare cases where retail and institutions are buying, I think price probably appreciates more. And it's more likely that those two overlap than situations where they're maybe both selling from an overall, if you think about time segment of possibilities for any individual day. That's what I think overall. It's playing the skews and not blowing yourself up with leverage and being very cognizant of the bets that you're making. I think that's how you survive, longer term in the space. And that should be the goal for people that want exposure to this asset class. It's not about trying to hit the 100x on an alt. I think if you've really done the research and you think this will go somewhere, it's about protecting your bankroll. But that's just kind of investing philosophy. I think everyone has a different style that works for them. So I can't say that necessarily works for everybody, but it seems like those are general principles that should work within whatever approach people tend to have. Not as investment advice, as life philosophy.
I guess just to shift gears a little bit, one more halving related topic. A lot of people who might be watching this don't understand what will happen once the halving occurs, and why hash rates will drop. Could you tell us a little bit about that and give a short explanation there?
Sure. Just real quick, as a primer for people that are maybe a little newer to the space, every time a Bitcoin block is found and appended to the chain, hence blockchain, there is a fixed amount of Bitcoin that is provided as a reward by the protocol to the miner that found the block. Historically, every 210,000 blocks that has halved. And the idea that, Satoshi, if you read what he or they or she was intending, was the idea was to sort of bootstrap liquidity and an inflation-based reward initially that would go away over time. So after this halving, the previous amount of fixed Bitcoin will go down, to single digits from 12.5 to 6.25. And that means, assuming price doesn't change, if you're a miner now, your cost basis, or I guess your revenues are halved. So effectively your profit margin on a gross margin basis is halved as well. So long story short, that will force inefficient miners to turn off their machines if they haven't already in anticipation of the event. But because of how Bitcoin's difficulty works, after 2016 blocks, every 2016 blocks, the difficulty, which is you can think of as not a random number, it is a program number, but it's arbitrary, but there's a continuity to it, will go up or down to adjust for the hash rate so that ultimately you're solving for the block time being the same 10 minutes on average. So after this halving, the idea is there will be a little bit of a time period between between the halving, which is in a couple of days, and the next difficulty adjustment. As we're recording this, it's a Friday. I believe the difficulty adjustment most recently was 4 days ago on Monday. So, there will be a time period where there probably will be miners that exit the network because they were profitable prior to the halving, and now that the block reward has gone down, they won't be. And that is why hash potentially will go down. But then this goes back to what we were talking about with how efficient are these markets. Miners should know. And there's another item that could make it take longer for miners, even if they're unprofitable, to turn their machines off, which would be the idea that some of them may have power purchase agreements. So they're kind of on the hook for that electricity anyway. So it's actually still better for them to mine, even if the incremental margins are negative, because they would stand to lose even more money relative to that if they just turned off, because they already paid for it, or they're on the hook to pay for the electricity. I've done a little bit of analysis looking into how quickly machines turn off, and there's definitely a lag time. Others have written about this too, I think. So I think hash should go down a little, but it may not even be that big a deal because there is the lag effect. There's the buffering effect that people should know this is going to happen. I know there are some people that are, every time historically that halvings have happened, there have been people that think there's going to be a minor death spiral that happens for Bitcoin. I've been hearing more about that. I really don't think that's going to happen, even if what we talked about is completely wrong. There are miners that own the equipment. There are pools that own some equipment and control some hash. They are dramatically incentivized to mine Bitcoin, even at a serious short-term loss, to keep the chain robust and alive, because they've invested. You're talking like 10 megawatt plus deployments, like tens of millions of dollars into equipment, into their relationships, into the power sourcing. And from what I'm hearing, like infrastructure investment has been steady or even accelerating, not going down. There are people that are opportunistically looking at repurposing natural gas or some oil, right? Some of these commodities have softened in price over the last couple of weeks or months, along with everything else. And there's some interesting entrepreneurial people doing work trying to apply that to Bitcoin mining, and in some cases like beating hydro, because you're talking about flare,
right? The Greenwich power plant in upstate New York selling 30% of their excess computing capacity to.
That's right. Yeah. I think there's more of those that don't make the news, from what I'm hearing too, and that'd be something.
in January, and I met some guys who literally in Eastern Europe. There's a nuclear power plant with excess energy, and they were talking about adding miners to be able to consume that energy to power it. I mean,
Absolutely. Yeah. I mean, somebody posted this on Twitter today, and I forget the handle specifically, but it was just an updated graph of geographically, like what the map of the world looks like, but countries were larger if they contributed more hash power to the Bitcoin network. And, you see like Kazakhstan, which was surprising because everyone thinks it's just China. China is obviously the biggest part, but you're seeing like Kazakhstan, Russia, Iran, and some other like Middle Eastern countries too, which I think if we as an industry can get past the OFAC and terrorist financing kind of fear, uncertainty, and doubt, that would be great. Maybe we can get through it because the governments are distracted by COVID, and maybe Libra can help us further once it launches this year. But I think eventually, what others have said, I totally agree with. The game theory of being a supporter of Bitcoin as it relates to a country's sovereign wealth is going to be overpowering the idea of like being late to the game, with the big exception that the US doesn't follow that grid. Like the US has kind of veto power. So that's a little bit, that's very important to think through. What is the US policy response going to be, weighing the benefits of innovation versus losing dollar hegemony? Maybe policymakers are more comfortable with the dollar being still very strong and even stronger now because other currencies are looking weaker. I don't really know. I think that's probably the area that I'm actually most nervous about medium term is still the policy response being a little uncertain. And just last point, I think on that, I just think people should keep an eye on where Hester Peirce from the SEC and Brian Quintens of the CFTC.
As if
their terms are
variables, Evan. I was gonna raise
where
that.
they go is really important. Like if they stay in the space, I think that's positive. If they go to private practice something on crypto not related to crypto, I think that would be disappointing to me personally. So we'll see. Not to put the onus on them or call them out. Hopefully, I don't see this, but I'm just thinking out loud, right? You want to see where people vote with their feet more than the words they say.
What do you think? Some of the fallout of something like that would be, right? So our biggest cheerleaders on the regulatory side, if we happen to lose them, where do we stand then?
There's the more libertarian part of me that's like, Bitcoin doesn't need regulatory approval. But like the pragmatist, former institutional investor side of me realizes, a lot of people aren't going to get off their butts and allocate without sort of the idea of a blessing, whether it's actually from the government or comfort from, whether it's Cambridge Associates or other consultants that they use to complete some of their diligence, whether on asset class or like a manager of that asset class. So I think we do need more regulatory certainty, but that feels like it's still a matter of when, not if. I mean, you're starting to see the 3IQ is the Bitcoin fund that just completed their $48 million raise in Canada. There's other now ways, even if you're a US person, to get allocation to funds that just hold Bitcoin internationally, despite not having an ETF. So in an ideal non-virus world, maybe that would have added more pressure to the SEC really reconsidering an ETF. To be clear, I think it's really good what they're doing on the enforcement side, continuing to clamp down on the ICOs that were blatantly securities offerings. I think that is definitely something that they are spending their time wisely on. But at the same time, others have made the case, like USO as an oil-based ETF, that some people owned, retail people owned, and didn't understand how the rolls worked and got blown up a month ago. How is that more dangerous than Bitcoin that doesn't have that kind of a roll issue, depending on how it's structured, right?
You're bringing up some interesting points now on a different level, right? So you talk about ETFs and why regulators didn't want to, or one of the big reasons they didn't want to do an ETF in Bitcoin was because of volatility. And then of course, what happens to kind of throw salt in the wound is oil. and
Right.
oil just caves into negative pricing. And of course, you have the retail market that goes into USO, or even worse, a double levered like a UCO.
Yep. Yep.
And people get blown out. And, I thought the whole point was, the Bitcoin kind of stop the ETF movement was to protect the investor. But you have hundreds of millions of dollars of unsophisticated investor money going into those products.
Absolutely. Yeah, it definitely raises some legitimate questions, which is not to say if and when a Bitcoin ETF happens, there's going to be some other sponsor that does something ridiculous, like make a 3x, 5x, 10x levered version of that. And that's going to generate some bad headlines, as a matter of fact. But
I mean, like what happened with XIV, right? Like that.
Sure. Yeah.
There as well.
Yeah. I mean, suitability is an interesting question for sure. But I mean, there's definitely I think whatever the balance is, it's a little different than where things are today is my own personal view on it. But we'll see. We'll see. Maybe it takes a different chairperson of the SEC. Maybe it takes a different administration, or I don't really know. I just don't think I don't think there are great reasons now, especially, on the back of the PTJ thing. Clearly, institutional investors that are, and ultimately people that have exposure to the Tudor, like accredited investors that have access to that vehicle now, potentially have some exposure to Bitcoin. But yeah, why is that okay versus, Main Street? And they're at the same time that they're talking about making Reg CF, like crowdfunding, easier, or just other ways, expanding some of the safe harbor language. I just think it's interesting that they're not publicly moving towards talking about allowing cryptocurrency ETFs, just because there's clear appetite, and in some ways they're easier to audit from like a NAV perspective, right? So I don't know. It's interesting to think about.
There are ETFs though that allocate to GBTC.
Sure.
I mean, there are ways to get access or exposure to Bitcoin without physically holding it or creating a Bitcoin ETF.
Absolutely. But I guess what I still think, given the premium for GBTC or ETH and some of the Grayscale products, you can clearly see there is like a demand from the types of people that may not have the qualifications, meaning like they just may not be accredited or willing to self-accredit, or may not be aware of the ways to get exposure, which is kind of ridiculous, right? Not to get all like, I mean, it's not that political. I mean, it's a matter of fact, there's a growing wealth divide. And I would say it's fair to argue that people that, not necessarily that they should be investing in Bitcoin, but people that may have thought about it and have arrived at the conclusion that they want exposure after doing their own research, may not be able to because of the inability to get access versus with a product that does not have a premium, or that they are able to access more readily.
Sure. Wow. I have so many more questions for you. We're going to have to do a part.
We can certainly table this and chat again.
Say, Evan.
Do you have one more, Alex? What's like the most burning one? I'll try to end on a high note for the audience.
Something, I'm not sure you're familiar with this. I was asked this question yesterday. It was pertaining to the lend market in Bitcoin. And the question was, did I have any concern about supply constraints in Bitcoin? Right? So let's say, you lever a loan, collateralized loan, 110 to 120 to 1, right?
Yep.
Do you have any concerns? I said no. And the reason being, and this is, I don't know if you're aware, there's a new coin on the market, which is a coin, a BTC short coin that just came on the market. And when I said I didn't have concerns about supply constraints, it was because we're gonna have these different innovative instruments that are going to allow for exposure to upside downside, much like indexes around Bitcoin, where you will no longer have to actually own the Bitcoin to get the exposure, right? And
right.
So what do you think of these new products? Because supply constraint never actually popped into my mind before.
Right.
Until the lending market scenario. What are your thoughts?
Yeah. So, obviously with the rise of consumer-based crypto lending platforms like BlockFi and Celsius, and then obviously there's institutional desks that have always had borrow available. The question of like rehypothecation, what it means for the supply of Bitcoin, has been pretty debated. I think my view is so long as those companies are allowed to fail if they mismanage their loan book, I don't really think that it's as big a problem or systemic risk in the same way. It's kind of related to the idea of not your coins, not your Bitcoin. People that choose to earn yield. Like actually, there's a portion of kind of the hot wallet that I use that I do earn yield on, but it's about sizing the risk appropriately versus the liquidity and kind of the longer term holding periods that you might be thinking of. It should be up to a person to decide. At the end of the day, there are only going to be 21 million Bitcoin, full stop. But yes, you can certainly add leverage to the system. But I think as long as price is not distorted, price roughly meaning like market forces, like if BlockFi does something and really blow themselves up, their equity investors are out and they are contributing to some near-term price volatility probably as they figure out their margin calls situations. But if I did not lend out my Bitcoin, then I'm not at risk of losing that Bitcoin, full stop, right? I think the impacts separate from that are ultimately what should be priced by the market and something that gets digested as new news comes in of greater solvency or lower probability of solvency. I think what I would be worried about is, this would be in a world where we've won, so to speak, right? But if like the US Treasury decides to hold some Bitcoin and then there are issues with now that Bitcoin is kind of, there's like some weird contagion risk with the old system and money printing in a way that wasn't an issue before, especially if they're kind of buying it up with some of the facilities that they're buying other risk assets today in the wake of the virus. That would be what I would worry about more. So I don't think it's as big of an issue. We've seen specifically with the volatility on Black Thursday, like DeFi liquidations, whether it was Maker or other issues that happened with Ethereum, which still is around and survived and didn't have issues, even though clearly there was leverage that went out of the system extremely violently and in ways that in some cases caused like dramatic slippage or just complete like obliteration of collateral, even when people thought they weren't going to be liquidated or that they were going to recover some of the collateral, and there was no recovery because of how some of the auctions worked and other opportunists, right? But I think as long as people aren't bailing out smart contracts, which I think we're now too late for. Like, I don't think we're going to see like an ETH classic, ETH split type situation anymore as an industry. Maybe that's going to be proven wrong, but Bitcoin is not likely to, there's nothing that could happen for that way for Bitcoin as far as I think. And then, ETH is also quite large too. So I really don't see that. And those are the risks that I'm worried about, not necessarily, how a lending platform is managing their book. Because that's up to them and the people that choose to deposit with them to decide and price.
Sure. Makes sense. Evan, really wish we could keep going. Also have a million more questions that I could ask you. I could sit here and do this all day. We're definitely.
Yeah. We'll do this again sometime. It was a pleasure to be on. Mm-hmm. Thanks, Ryan. And thanks, Alex, for hosting. This was great. Hopefully your audience gets something out of it. And if people need to look me up, I'm Evan Feng, F-E-N-G. Evan the Feng on Twitter. I'm not super active on social media, but you can find me there on LinkedIn and Medium too if you just search my name.
One of the things we do post edit is we throw in the outro, which visually we have a screen share with your Twitter and your website and everything, so everybody will know where to find you. This has been a very timely discussion, and we were definitely lucky to have a great mind like yourself on the show. It's been awesome. Thank you.
Yeah, I really appreciate it. Thank you so much. It's been a great discussion, and look forward to hopping back on at some point in the future. Hopefully not eating crow with what I talked about. I feel like I was sufficiently on Hedge with a lot of my statements, but that's what you should expect from someone of my background, right?
Absolutely. And I didn't want to throw in that ending question of where you see Bitcoin on December 31st. So
you didn't throw it in, so I won't answer it.
All good.
I hope higher
Thank
than
you
here.
very much, Evan.
Yeah.
Thanks a
Take
lot.
care, guys. Have a great weekend.
Bye.
All right.
Learn more about Evan's crypto fund, Tapestry Capital Group. You go to tapestrycapital.fund. Again, on the internet, that's tapestrycapital.fund. To follow Evan on Twitter, head on over to Twitter, and his handle is @EvanTheFeng. @EvanTheFeng. Also, to get more on these details, you can find all the ways to contact him below in the descriptions box on YouTube. Thank you.